Sale and lease of residential properties. The sale and lease of unfurnished residential properties are exempt from GST. If you are selling or leasing furnished residential properties, GST is chargeable on the value of the furniture and fittings in the residential property. MNC's property arm leases out properties. They leased out a furnished condominium unit for $3,500 per month, but did not charge GST to the tenant, as they remembered that residential properties are exempt from GST. This is incorrect. The lease of the unfurnished condominium is exempt from GST, but the lease of the furniture and fittings is taxable. The monthly value of furniture and fittings that is subject to GST is the difference between the monthly rental of the furnished condominium and the monthly rental of the unfurnished condominium, which is 1/12 of the annual value of the condominium. For this case, the annual value of the condominium is $36,000. Thus, the monthly rental of the unfurnished condominium is $3,000, and the monthly value of the furniture and fittings, which is subject to GST, is $500. MNC entered into a new tenancy agreement for the furnished residential property, and the new monthly rental is $2,800. The annual value remains unchanged. Since the monthly rental is lower than the monthly bare rental of $3,000, no GST is chargeable on the supply of furniture and fittings. Commercial properties used by a third party for free. If a third party occupies commercial properties owned or leased by you for free, and you had claimed input tax on the purchase or lease of the properties, under the law, this is deemed as a supply of service to the third party. The value of such services is the full cost of providing the services. MNC claimed input tax on the purchase of an office building and allowed their related company, RC, to occupy 50% of the space free of charge. MNC did not account for output tax on the free use of the property by RC. This is incorrect. Since RC is using the property for free, MNC is deemed to be supplying a service. The monthly output tax to be accounted for is 1/12 of the annual value of the property in proportion to the gross floor area occupied by RC. If MNC had rented the space from a landlord and claimed input tax on the lease, MNC would still need to account for output tax when they allow RC to use the space for free. The value of the deemed supply is the actual rental, excluding GST, in proportion to the gross floor area occupied by RC. If you have made errors in your GST returns, please correct the errors by filing a GST F7. For more information, please visit the Inland Revenue Authority of Singapore website.